like you said, Joe, when you want to make an investment, you have to go through middleman, the custodian, because you don't have direct access to your funds in your IRA. You have to submit certain form, get it submitted to the custodian, wait for them to review it, approve it, and then they'll, release the funds for a certain investment. And like we said, in some cases, when it's a time-sensitive investment and you want to make an offer, well, you last a few days, you may lose that investment opportunity. So what we do is I guess it's a niche within a niche, and it's not only self-directed account, but it's the one that gives you checkbook control. And there's two ways to do that: a self-directed checkbook IRA and a solo 401k. But both of these options, depending on what's best for you, if we have time, we can get into the differences. But both of them, essentially, you will end up with a checking account for your IRA or 401k. You will control that either as a manager or as a trustee of the 401k, and you can make investment or execute transaction that is related to the investment as simple and as quickly as writing a check. That's what we empower our clients to do.
And I love it. I don't have anybody looking over my shoulder. I literally have all the money in the bank. It goes out to my investments. I flip properties. It goes all back into that checkbook. It's so easy to do that it's just like, I'm happy every day that I met you.
Yeah. So glad that it's working out, and you're just one of the thousands of our clients that we receive in this kind of feedback that, wow, the freedom and the control and the speed. Now, having said that, I think it's important to talk a little bit about there is a saying, with freedom comes responsibility. So it's important for you to understand the rules. Yes, you're in control, but there are certain rules. And it's a self-directed IRA. It's still an IRA or a 401k. It's not your money. It's retirement funds. Think of it as it's your future you money. Okay, it's not your money right now, but it will be yours once you start taking distribution. But right now, you just have a fiduciary responsibility over your retirement account to control that and invest it in a way that you want. But remember that fiduciary responsibility that you have. So you are to invest this, and you can use those funds for expenses that are directly related to the investments of the retirement account. You can't use it in any other way. So it's not for you to, you have that checkbook control, but you can't just write the check and pay for a vacation to Hawaii.
Right. No, there's absolutely, there's rules. Yeah. And you're real good about letting, I know me, but everybody else, about what the rules are and how to not get in trouble with the IRS. I remember the first year, I actually filed a tax form because there's a certain threshold that if you have more than, I think, quote, 250. There you go. If you have more than 250,000, then you have to file a special form with the IRS, which I've been doing ever since. But it's literally 2 or 3 pages.
Yeah, it's 2 pages. Pretty straightforward.
2 pages. Most of it is what was the value of your account day 1, January, and then what was the value December 31st. Pretty much nothing else, right?
And the contributions you made. Any contributions you made during the year.
Okay. Yeah. But that's the little accounting that you do tax-wise.
That's specifically for the 401k, for a solo 401k clients. It's not the case for an IRA. That form is applicable only for the 401k clients.
Okay. So it's even easier for IRA?
Yeah, it's even easier for IRA.
Wow.
Less work.
Wow.
I heard something about Peter Thiel. He had in his Roth account $1 billion in there because he used some of it in the 90s to invest, like angel investing, and then he eventually had $1 billion in there, and then the government was like, wait a second, this can't be allowed. And it was just all tax-free, apparently.
Yeah.
That's
Absolutely.
amazing.
They,
I
they
mean,
made the rules.
exactly.
You know?
Yeah. And then you play within them. But
Yeah.
it's like you're talking about investing, using it for investing, and then think about how powerful that is for your retirement because you're getting such great returns rather than letting it just sit in an account, like you said, maybe dictated by the stock market, which is kind of up and down. This is, you're getting much bigger returns that you can eventually use later on.
When you're lending money out of your 401k, IRA, whatever you have, what interest rate are you charging right now?
Well, I work with the broker, and so broker originates the loans. And now what I'm seeing is, depending on whether it's a first or a second, first, obviously, a little bit less risk and a little bit less return, but in the neighborhood of 10 to 12%. And if it's a second, it's 12 to 15%.
Okay. Yeah, it's about
Pretty
average.
amazing.
Yeah.
And
It's about average.
yeah.
Yeah, but it's good money if that's how you want to invest, kind of passively. So, yeah, that's good. That's excellent. Yeah.
It's great, and it's super easy. I know when I signed up, Dmitri's got an amazing team. They reach out to you, they get you onboarded real quick, and just like it's like boom, where you're ready to go. Plus, on the website, it's like you have so many videos. It's like every question is already answered there. So I don't know how long it took you to build all that up, that library of videos explaining everything, but it's huge.
Yeah, we have a knowledge base, and the videos is. Lately, we've been producing more videos, but the knowledge base specifically, it came out just people or clients specifically will ask me questions, and I answered that question. But then I said, well, this is a good resource. Somebody else can learn from that. And we decided to build a knowledge base. So we use that question and answer as an entry into a knowledge base. And so it is now available for all of our clients to go, and you can just simply type a keyword or key phrase, and you'll get, at least one, probably, maybe multiple answers to your questions or articles related to your question that you can go and read. Somebody else asked that before. So we didn't want that to be wasted because I think it's very valuable information.
Absolutely.
Yeah, it's amazing. Is December one of your biggest months where everyone's freaking out? And
yeah, November and December.
That's what we did. Joe's like, you need to call Dmitry right now. It's like, okay.
November and December are two biggest months. Actually, last December was our biggest month ever.
Yeah.
Wow.
In last 13 years I've been doing this. We had a little bit, slower last maybe 3 years. I don't know, maybe it's related to COVID or what, I don't know. But last December we've been really busy. But, maybe we also added a couple of new team members to our team. And so it could be part of that. But, yeah.
That's great. Can you go over some ways maybe people in the real estate industry, like you mentioned lending, maybe a few other ways that are examples of how you could use, self-directed account?
So you can buy physical real estate in your IRA or 401k. Many of our clients do that. I do own a couple of rentals. One, and speaking of the ROT, I think you've been talking about the ROT and how it can be amazing. Just to give you a flavor of what it can do with, I guess, a real life example, my own example. I purchased a property in my ROT in just outside of Phoenix about 10 years ago. I think I paid $110 for it with about $10,000 and a fix up. It was a light fixer. And it was rented at the time at $895. Well, today that property is worth about $400, and the rent is $2,000.
Yeah,
Nice.
And it's inside of a ROT.
Yeah.
So it can be very, very powerful. But yeah, you can own rentals. I still have that. And then you can, I actually ended up with another rental, I guess, invalid involuntarily. I didn't ask for it, but it's a loan that I did. It was a loan. I actually lent money, which ended up in default, and then I ended up with a property.
Yeah.
It's out of state, also in Pennsylvania. It's a smaller property, but people sometimes concerned about the risk that comes with lending. So again, let me use an example. My own example here. I lent $38,000 at the time. It was in the first position at 9%. I was getting $350 a month, and it's been going fine for a couple of years. And then they started paying late, and then a few months late. Eventually, the owner agreed to sign a deed in lieu of foreclosure, so I didn't have to foreclose. They just signed the deed over to my retirement account. I did it in my retirement account. And so I now own that rental because, again, at first I was just a lender. It's probably been about 5 or 6 years now. And that property is worth, remember, I lent $38,000, it's worth about $90,000. And it's producing $700 a month in rent. Mm-hmm. So it's paid for itself probably a couple times now, and it's just a cash cow there. Mm-hmm. I actually prefer to be a lender rather than a landlord. So I want to sell this probably this year and just reinvest into another loan. But you can do that. And then also I some of our clients, they do invest in syndications. So like a larger commercial deals where you invest and just become a limited partner in a larger deal. You can invest in private businesses. So if there is a startup, it's not a publicly traded, and usually the funds are raised by maybe friends and family members. So if you have access to those opportunities, then you can actually invest with your retirement account. It can be very, very profitable. So that's actually, to do something like that inside of a Roth makes sense because your potential is just many, many times your original investment. And again, there is really no limit. I have just one example comes up. A client purchased investment property in Belize. And they did that with the goal of actually converting that to their primary residence. So they, at the time they bought it, they were working, and then a few years later, they actually retired. And what they did is, it's called the in-kind distribution, where you can take the asset that is inside of your retirement account, and you can take distribution of that asset to yourself. Rather than taking the cash out, you can actually distribute the asset. So they converted that to their residence now, but they used retirement funds to acquire residence in exotic place for themselves.
Wow. Yeah. And that property you were talking about, that's in Newport
Belize.
Beach? No, the one before that you said you foreclosed on. That was in Newport Beach?
No.
I'm just kidding. I'm just kidding. It's like 90,000. It's a joke. It's a joke. You're talking about Roth and IRA 401k. What is the difference? Because there is a big difference between those two. Can you tell us what that big difference is?
Sure. Yeah. So the traditional contributions, those are made pre-tax. And maybe it's a good time to actually segue into solo 401k.
Okay.
And so let's back up a little bit and let me explain what solo 401k is.
Okay.
So solo 401k is a retirement account that's designed specifically for those folks who are either self-employed or own a business without full-time employees. Okay. And that includes many of my clients, real estate agents. Okay. So if you're a real estate agent, you might be just a 1099 and file in Schedule C. That works. If you're incorporated or have an LLC, that also works. You own a business, no employees working for you, you qualify. But it has some tremendous benefits over an IRA. And the first one is the ability to make large contributions. And I'm talking about really large, 10 times larger than an IRA. So with an IRA, with new rules this year in 2024, actually the limit have gone up, so you can now contribute $7,000 if you're under 50 plus $1,000 additional in catch-up. With solo 401k, you can contribute $69,000. So that's your 10 times an IRA. So if you're self-employed and if you're doing well, then, and obviously being self-employed, you have the capacity to do well, because if you're on a paycheck or you're on salary, you're capped. There is a limit. But if you're good at what you do, especially as a real estate agent, you have the ability to make a lot more. Well, and every a person who reaches that level, the common problem they experience is the taxes. The more you make, the more you're going to pay to Uncle Sam. Well, solo 401k is a great tax shelter because you can contribute $69,000 to this vehicle just for yourself. Now, if you have a spouse and you bring your spouse on board to help you in your business, you can potentially double that. I mean, you're talking about almost $140,000 of sheltering your income from taxes. I mean, that can be huge. $140,000, dropping your taxable income by $140,000, you're going to be in significant smaller dollar amount, but you're also going to drop a tax bracket. So, I mean, if you just run the numbers, you can easily save $40,000 on taxes alone just by maximizing your 401k with you and your spouse. So that's huge.
Is there like an income limit that you have to make before you contribute this?
No,
is it based on
that's
that?
the beauty. No,
So like if you made $69,000 last year, you could literally put it all in the 401?
Okay, so no, there is a certain formula. Okay, so with solo 401k, there is two components. The first component is elective deferrals, because being a self-employed individual or business owner, you essentially wearing two hats. You're wearing a hat of an employee, right? Because you, as a real estate agent, you meet with the client. So you put this hat of an employee, you go, you do the work, right? You show the listings to potential buyers or to your help seller sell the property. But then you also doing all the other work in the background, and you're now putting a hat of a business owner. So as an employee, you can contribute $23,000 into your solo 401k. And that can be up to 100% of your compensation. Okay. So if you part-time real estate agent and you made $30,000 part-time, 23 can go into 401k. Okay. And then on top of that, there is what's called the profit sharing. And the profit sharing is up to 25% of your net self-employment income. So if you made $100,000, you put 23 plus additional 25% of 100. So that's approximately almost like in 40s, high 40s, you can contribute. So it's a significant deduction. So the more you make, the more you can contribute. Again, there is a kind of a sliding scale, a percentage. But within a solo 401k, there is a ability to make Roth contributions. And for those of you who know what the Roth IRA is, again, it's contributions that you make after tax. You pay the taxes, you contribute, and then qualified distributions will be tax-free. Okay? But with the Roth IRA, if your income is over a certain threshold, you're not eligible to contribute to a Roth IRA. But with the solo 401k, there is no limit. You can be making $1 million and you can still contribute to a Roth 401k. There is no restrictions.
Got it. Yeah, and I think that's the biggest important part is that the 401k or the IRA, that's money that you do pre-tax, and when you get to be 72, I think it's now?
You reach a normal retirement age, which is typically 60 for most people. After 60, you can start taking distributions without being penalized. But the distributions from a pre-tax account are taxable. So you take out certain amount, that becomes your taxable income. You pay taxes on that. Whereas if it's a Roth, IRA or Roth 401k, the qualified distributions again after, and the qualified, let me qualify that. And that means you had the account open for 5 years and you reach 59 and a half. Okay, so if you meet those criteria, then you can take distributions from a Roth IRA or Roth 401k without being taxed.
Tax-free. Tax-free.
Yeah.
Yeah. And if you start early, you start in your 20s, you start doing that, you could have millions of dollars
You can have
in there.
millions easily, yes.
Yeah, easy. Yeah, like it's pretty amazing. It really is.
It is amazing.
It's amazing.
Yeah.
I think people, I was the same way. It's like there's a lot to take in, but once you start understanding the kind of the mechanics of it, and it's really mind blowing, like how you can use this in your investment game.
Absolutely.
Yeah.
Mm-hmm.
Otherwise, you're just giving it away.
Yeah, and the way I see it is that, you can certainly use this tool as a well-built-in tool.
Yeah.
And, it's not overnight, but it's kind of a sure, slow way to build wealth.
Mm-hmm.
And you can easily have a 7-figure retirement account. And actually, after you invited me to come and speak to you guys, I had this idea, well, I've got so many clients like you, Joe, that successfully use this. And kind of like an idea of, building that knowledge base with the questions. I want to start interviewing my clients who are successful.
Yeah.
I might start with you.
I'm here.
There we go.
And
ready to go.
Because there is, I just want to use that as an inspiration for other people because, if you can do it, somebody else can do it.
Mm-hmm.
If I can do it, you can do it.
Totally.
Anybody can do it.
Yeah.
Anybody can do it. Do we have any guests with questions?
No questions, but I have one.
Okay.
Can you have these accounts like simultaneously, a 401k, a Roth, like multiple retirement accounts?
You can have simultaneously multiple retirement accounts. Yeah. So again, with the solo 401k, you can have the pre-tax account as well as Roth account. So it's one plan, but you can have different sub-accounts within one plan. And you can also have an IRA in addition to that. If you have a traditional IRA and you have a solo 401k, then typically the best course of action will be to take your traditional IRA money and roll it over to a solo 401k, bring it under one umbrella, so to speak, because it's going to be easier for you to kind of manage. I try to apply a KISS principle. You guys know what that is?
Yeah, keep it simple, stupid.
Yeah.
Yeah.
So I think it's originated from military somewhere,
Yes.
but it's applicable in a business, and I try to apply it in my life and in my business and my retirement account, just everywhere. I think it's so powerful. And when it comes to retirement accounts, again, our lives are complicated as it is, right? Why not keep it simpler? And so if you have traditional IRA and also solo 401k, it will be easier or simpler to bring it under one umbrella so you can potentially invest it together, just make it easier. Now, if you have a Roth IRA is the only account that cannot be rolled over to a solo 401k. So Roth IRA has to stay Roth IRA.
Mm-hmm.
You can self-direct that also, but it has to remain Roth IRA.
You wouldn't want to do that anyway, because if you did that, then you'd be taxed on the money.
Well, no. If you have Roth 401k, for example,
Yeah.
you can roll that over to a Roth solo 401k. So it
Right,
still
but you wouldn't
remains.
want to put it into an account, a solo 401k that is taxable.
Well, within solo 401k, you can have Roth sub account.
Okay.
So you can have two buckets within solo 401k, the pre-tax account as well as Roth.
Okay, yeah,
So
but you want to keep those separate.
Yes, it will be two separate buckets.
Yes.
So it will you won't be taking post-tax money and bringing that into pre-tax. I'm not
Right.
talking about that.
Right.
So you'll keep the same type of money. It will remain to be Roth.
Yeah.
But Roth IRA cannot go to solo 401k.
Yeah.
IRS doesn't allow that.
you bring up a subject now, and I see ads and all these things. Roll your solo 401k into a Roth, and I always thought like, in please correct me if I'm wrong. If you do that, then you have to pay the taxes on the money you roll over into a Roth, correct?
Yeah,
What would be the advantage of doing that?
It's called the conversion.
Okay.
Roth conversion. In fact, I had a extensive conversation with one of my clients, actually newer clients, and she was asking about that. She wanted to do Roth. Maybe she heard some of this. She was talking about mega backdoor Roth and so on.
That's the buzzword.
That's
That's the hype.
And so
That's the clickbait.
That's the clickbait now.
That's the clickbait.
but here is the details for this. So she was like, really into Roth and mega backdoor, and I start. I'm not a CPA. I want to make that disclaimer.
Yeah.
This is not my area of expertise. I talk to a lot of CPAs. I talk to business owners every single day, multiple times a day. So I understand this, but taxes is not my area of expertise, although I understand this.
Mm-hmm.
So I was talking to her, and without going into any details, but she's a high earner, multi six figure, okay, and she's single, okay, and I'm thinking and kind of talking to her. Well, what you need is not right now. You're single. You don't have a lot of deductions. You need every possible deduction right now to minimize your tax liability. Because if you're making, I think she said $400,000 to $500,000, you're paying a lot of taxes. So if I were you, and that's what I told her, this is not a tax advice, but if I were you, I would look for every possible way to reduce my tax liability now. Now, there might be a time in the future, and she actually said that in the future she's planning to get married, have children. She might be taking a year or two off, and not going to have that high income year. Well, guess what? You can do a Roth conversion at that time. But today I told her, I think you should contribute pre-tax to get the tax deductions you need right now to bring your tax liability down. But with the solo 401k, you have that Roth provision built in, which enables you to do the Roth conversion anytime. You can do it today, you can do it tomorrow, you can do it in December, or you can do it anytime over the next 20 years. You have that ability. And so there is no simple answer, and certainly there is no one-size-fits-all when it comes to Roth. Generally speaking, Joe, like you said, the younger you are, the more time you have to grow your Roth, the more sense it makes. But if you're older and if you're in a higher tax bracket and you only have a few years left, then you probably need the tax deductions.
I'm out. That's me. He just described me again. Here we go. Go ahead.
But not just you, Joe. And I'm partially you.
No, you're not. You're not even close. Nah.
Well, we got similarities, whether you know it or not.
Not age-wise.
Not age-wise, maybe,
Yeah.
but some similarities where I was maximizing my Roth for a number of years,
Yeah,
but then
absolutely.
I
You
got to a
should be.
point where
Yeah.
I needed every possible deduction. So,
Yeah.
and with solo 401k, you have beauty. You can 1 year you can maximize your Roth, and then next year you can maximize the pre-tax.
Nice.
Wow.
A lot of flexibility there.
I know.
Yeah. That's good.
That's great. And then you can just roll them right into, the investments. Now, when you're buying a rental, that could be a long-term thing. So you just take money out of your account. Do you have to buy the rental all cash, or can you go and get a loan on it? How does that
So
work?
when you buy a rental inside of a retirement account, you mean, right?
Mm-hmm.
So then technically, it's not you who the buyer is.
Right.
It's not you who the owner is. Your IRA or 401k is the owner, and your retirement account is a separate legal entity from you. So you are not your IRA, and your IRA is not you. So it's two separate entities. And your IRA can own a rental, and you control it. You're in charge of it. But all the rental income or if it's a rental, if it's something else, some other asset, the income from the investment going back to the retirement account. It's not your money. You can touch that. And likewise, all of the related expenses must be paid from the retirement account, such as if it's a rental property, property taxes, insurance, repairs, property management fees, and so on. It is a long term, but again, if it fits your strategy, that's fine. You can certainly own a rental. You don't have to pay all cash, although you can, and I have clients who do that. They just pay cash and buy, and they own property free and clear in the retirement account. You can actually finance a purchase of a property inside of your retirement account, and but because you are considered, I didn't talk about this, and I was just reminded myself that in addition to those two not disallowed investments, which is life insurance and collectibles, your retirement plan is prohibited from engaging in any transaction with disqualified person. And disqualified person is yourself, your spouse, your kids, grandkids, and their spouses, your parents and grandparents. Essentially, it's a vertical line, okay? It can be extended family members, just not immediate family members. And a couple examples. If you're a real estate agent, you can't represent your 401k in a transaction if your 401k is buying a property, whether it's buying or selling. If you are buying a fixer, you personally cannot go and work on that property yourself. You have to outsource everything. You control it. And the easy way to understand that, that's how I like to explain, is the difference between a white-collar worker and a blue-collar worker, right? A blue-collar worker is someone who's actually working on the factory floor with their hands. They're doing something. And a white-collar is someone, white shirt and tie, and they're sitting at the desk. They're on the phone doing the paperwork, on the computer. So you can do the white-collar type of work as far as managing your investments. You just cannot do hands-on work. So when it comes to rental property, you can buy it, you can pay the bills, you can deposit the rent checks, and so forth. But because you're a disqualified person, you're not allowed to provide a guarantee for the loan to an IRA. So that's why if you decide to finance the property, you cannot use conventional financing. It has to be non-recourse loan. And non-recourse simply means that there is no personal guarantee. The property that you're buying is the only security for the loan, okay? Because conventional financing, let's say you buy in a residence. You go to the bank, and bank wants to see your ability to pay, how much money you're making, what's your credit history. Because if you stop making payments, they're going to be after you. Well, that's not the case here. That's why it's actually easier to get a non-recourse loan. But there is only a handful list of lenders that do this kind of financing, and we have them listed on our website. And it's, just about the same process to get the loan, maybe even easier with some lenders than conventional, because again, they're not checking your payment ability. They're looking at the property. Typically, the down payment requirement is higher, about 30 to 40%. The rate might be a little bit higher, but still it's better than paying 100% because you're using other people's money. And you can finance it and own the property with leverage inside of your IRA or 401k.
Love it. I want to be leveraged.
Okay.
Okay. I saw a video on Sense Financial. Said something possibly, and maybe I'm wrong, you can use it for a down payment on your primary, or you can use it to get your primary somehow, but then you have to pay it back within a certain amount of months. Yeah,
so that's what you're referring to is a participant loan. So if you have a solo 401k, just like some of you who have a 401k at your employer or had a 401k at your employer, there is a loan feature that you can actually take a loan from your 401k. solo 401k has the same feature. Not available with an IRA, unfortunately. You cannot borrow from an IRA, but you can take a loan from a 401k. And loan can be taken for any reason, including purchase of a primary residence. So if you're taking a loan from a 401k to buy a residence, because generally it's a 5-year loan, you have to repay it within 5 years. If you're using it to buy a residence, it's 15 years. You can stretch it to 15 years.
Learned something new.
So you can take $50,000 out. Your spouse potentially can take $50,000 from her 401k account.
Okay.
So you've got $100,000, and you can use that as a down payment to buy a residence. And it's a 15-year repayment plan, and you paying interest back to your own 401k. So you're actually helping your own account grow.
Wow.
So that's what you're referring to.
Yes.
I know there's a new law that affects LLCs, C Corps, and stuff. Does it affect solo 401ks, IRAs, as far as reporting who owns them?
Yeah, so it doesn't affect the 401k or an IRA directly, but it can affect indirectly. So it actually, and we did send out announcement about this recently, that most of our clients actually will be affected because for checkbook IRAs, there is a LLC that is built inside of a retirement account, inside of an IRA, that enables you to have that checkbook control. So if you have LLC or another entity inside of your retirement account, then yes, you will have to report that.
Okay.
And then for many of our clients solo 401k clients who are business owners, they're incorporated, they have entity, whether it's LLC or a corporation, then it will apply to that entity
As well.
that their business entity. So it's not directly to retirement accounts, but indirectly many of our clients are affected.
Got it.
Good question.
Okay. Yeah. I call it something, but I don't want to say what I call it. It's okay. We'll move on.
Privacy is slowly eroding.
It is.
You mean the term for that?
Joe has his own
I have
terms
my
for
own term.
everything. And
I have my own.
Oh,
term.
you called it something
little
that
crass.
Yeah, I have my.
Yeah.
It's
The-
not crass.
I'm just kidding. I don't know.
the government term is beneficial owner interest
Yeah, no,
reporting.
I call it something else, but we won't go there. Reach out to me if you want to know what I call it, okay? Yeah, reach out to me.
Yeah.
Are you forgot or you don't
Oh
want to
no,
say?
I know. I just want to say that on the air.
Okay, I'll
So
ask you. I'll ask you.
I'll get
off air.
some hate mail. Does anybody actually mail anymore? I'll get some hate emails.
You'll get trolled.
Yeah,
Yeah.
you get trolled in the comments.
Yeah,
We don't
that's
need that.
okay. That's
Just
okay. We have one video that's really doing good. We recorded a video last year on April Fool's Day, and it was an eviction that we did, and it's basically fake. And at the end, we put down there, April Fools.
Oh,
And I get like a lot of responses like, that was clickbait or I knew it from the beginning this morning. I knew it from the beginning. I was like, okay, thank you. It's like, it's an April Fool's joke, Lighten up. Hello. Move on.
just
What
smile,
else we have?
smile or laugh and
Yeah,
go on.
that's right.
Yeah. Well,
We need to smile or laugh more.
Yeah.
But I think that's a great idea of starting, your own podcast and having your clients come on. And
Yeah.
there's so many different ways you can use this that it's especially if you're just starting out. I'm like, okay, what do I do? I can flip. I can do like what
See,
Joe does.
Alex set all this up. So if you need an expert on what to do and how to do it, he's the guy.
We could do a simple version.
Yeah.
A couple
he's,
mics.
He's the guy. He had me put this wallpaper up here.
We're still building it out too.
lights and yeah, it's
Still building
it's
it
a
out.
good set.
Cool.
Yeah, it's pretty fun.
Yeah.
But yeah, so many creative ways to use this. Let's not give it to the other guy. Keep it for yourself,
Yeah.
your future self. Now, are you getting? Do you have kids?
Yeah.
Okay, you have them all dialed in. They're already building theirs up, or I know you can get Roth for your child. and all
Yeah.
that
For your kids, and I set up a Roth IRA for my daughter, many years ago, and it's done well.
Amazing.
And if you have kids, and if you own a business, get them help you in your business. Pay them. And then they can put that into a Roth IRA.
How young can they be?
I have clients who set up IRA for like a 2-year-old. If you're a real estate agent, use it in the marketing.
Yes. Yeah,
Yeah,
absolutely.
You know, take
pictures, the family.
What about in the
you
womb?
know?
Has anyone done that?
No, I don't know about that. No, because
Someone's done that.
Well,
they have to have
in
they
the
have to
womb
have
is a real person.
Exactly.
Okay.
Yeah, but you
It
have
is
to have
but
Social
it's
Security number.
Exactly.
Yeah.
Yeah. So you can set up a Roth IRA
sorry.
for
Okay.
unborn child.
Yeah.
It just hasn't been done yet. No, I'm just kidding.
You've come up with a great idea.
Yeah, exactly.
Yeah, who knows?
All right.
Somebody's going to say, yeah, let's do it.
Yeah, exactly. Okay.
know?
That's interesting. Okay. And so you building up their retirement and then I guess.
And saving you on taxes as well.
Yeah.
Because
Yeah. So
if it's from your business, then you take that as a tax deduction. It goes to them. If it's under a certain amount, they don't pay taxes on that, correct?
no.
Yeah.
Yeah, she paid 0 taxes on all the contributions this year, and it was a deduction for me.
Yeah.
And it's going tax free inside of a Roth. Definitely want to engage with your CPA. Make sure that you're doing this correctly, but it certainly can be done.
Absolutely.
What about for your parents?
What about them?
Like if I wanted to contribute to my mom's retirement or something like that.
I don't think you can contribute to your mom's retirement, because you have to have earned income. I mean, your mom can contribute to her own retirement account if she has earned income, but
Well,
she'd
if
have
you
to
if you
contribute.
employed her, then you would pay her. Let's say you paid her $10.99, and if she decided to put that into a 401k or in her or a Roth, she could do that, and
Yeah.
you could deduct that from your expenses.
Okay.
You can do it that way,
Okay.
right?
Yeah.
Yeah,
All right.
you can do it that way.
I'm trying to get my earned income back to 0. Is that possible?
Anything's possible.
That is possible. Yeah.
Anything's
Right.
possible. Yeah.
Okay. All right.
I
That's
saw.
good.
I don't want to get into politics, but real quick,
Can't help
I saw an interview the other day, the one where Trump was debating Hillary, and she was complaining that he hadn't paid taxes in 10 years. And he said, well, yeah, that's because I'm smart.
Right,
And he goes like, all the people that give you money are just like me and are smart and are taking advantage of the laws that you wrote. Okay. And so, yeah, of course I don't, because I'm smart.
Mm-hmm.
There
Yeah.
you go. Yeah. If you're smart,
You
can
Keep
get to
it.
0.
Okay.
it may seem unfair on the surface. I even get a little bit of a kickback from my wife the other day when we were talking, and I was just because I was able to reduce my tax liability almost to 0 by investing in commercial real estate, and while my income was growing, and it's all legal. I mean, it's all in my tax return. I'm not hiding my income; it's there.
Yeah.
But I have deductions that bring my taxable income down.
Absolutely.
I didn't invent those deductions.
Yeah.
Mm-hmm.
So, and the strategies are out there. You just need to apply them to your situation. And
Yeah. Absolutely.
as my actually, I've done it not without my tax guy, and he says you don't want to pay a penny more to the IRS than you have to.
I love
I
your
don't know
tax
who
guy.
would, I don't know who would want to pay a penny more. Let me ask you real quick, your Roth or whatever that you have set up for your children, your daughter. Obviously, she's not 18, so she can't, sign the documents and all that stuff. So you have control over that account.
Mm-hmm.
Does that control go over to her when she's 18, or is there like I have a living trust, and when my kids were small, if I had died, they would receive the money that I had, but at certain ages.
Yeah.
So like 25, 30, 35. Is there something like that set up? Or does, like she turns 18, she goes, thanks, Dad. I'm out of here. See you later for, you know.
I think she'll be in control after that, but I'm not sure what that answer is. I believe,
Okay.
I believe she will be in control, but she'll follow my guidance.
Oh, absolutely. I have
Yes.
no doubt of that. But, you know, some kids don't follow their parents' guidance, you know? It's like, wow, okay. Yeah.
Yeah.
So, yeah, good for you.
Amazing. Okay. Well, how can everybody reach out to you if they want to get started?
They can find me on social media. If you're going to put my name out there, it's pretty unique. You can easily find me there. I'm on LinkedIn, on Facebook, on Instagram, and Bigger Pockets. And you can also go to our website, which is sensefinancial.com, and sense is like common sense, SENSE,
Oh, yeah.
because it makes sense what we're talking about.
Oh, yeah. I've spent
kinda-
hours on that site, just like staying up, clicking through all the stuff, the knowledge base and the videos. It's
good stuff.
It is good.
Good stuff.
Yeah, and you know, I just want to say that everyone's situation is unique, and what I would like to offer to your listeners is that you can book one-on-one with me, a phone call, and it's complimentary. Where normally I'd like to take the time to understand what your situation is, and then maybe make some recommendation, answer your questions, but. I always like to put myself in my client's shoes. If I ask a question, I want to understand, you know, what I will do.
Yeah. Oh, and another thing I love that you did, the live Q&A Zooms.
Yes, those are great.
Those are amazing because then I think I dropped like 4 questions into the last one, and then you read it and then answer it, you know, which is
Were they good questions?
probably not. They were just straight noob. I could tell you. He
Newbie
rolled,
questions.
yeah, he rolled his eyes a couple times, and he's like, "Oh my god, one of these guys." And I just joking.
Well, guess what? You know, the questions actually, I always encourage questions, especially if, you know, on the live Q&A, because other people are learning from your questions, not just you.
Yeah.
You know, you might think about something and might think, oh, maybe it's a silly question, or maybe it's simple. But guess what? Somebody else might be even more shy than you are, and they don't ask question, but they can learn from your question.
Yeah. And the ladies you have working there are amazing too. I've called them just like randomly, like, I'm filling out this paper. What do I do in C6? She's like, just check yes. Okay, thanks.
You're the 12th person that's called me today, but I'm okay with it.
Yeah, they're so good. They like, it's cool. So
we're blessed with the team. We have a great team.
Yeah. So let's get all our retirement accounts super fat this year, y'all.
Yeah,
I'm
thank
ready.
you. Thank you for showing up. Thank you for being here. Thank you for giving us all your wisdom and knowledge. It's greatly appreciated.
You're welcome, Joe. It's been fun talking.
Thank you.
I enjoyed it.
Yeah.
Excellent. All right, you guys, please share this podcast with anyone who can benefit from this, which is everybody. So young and old, pass it along, and we'll see you guys next week. Joe, anything else?
You called me old again, but see you guys later.